We're trying to process these numbers as they come out, but it looks like a good story, I would say, just top line right now for JPMorgan.
So offhand, the first thing we look at, FICC and equity trading about in line, maybe like a touch light versus some of the estimates we've gathered. The net interest margin is something that I've been looking at. It looks like it came in lighter than expectations. The yield curve is something that everyone's been watching over the last quarter. JPMorgan has said in the past that it's really short rates that are more important to them. For a lot of banks, it's more important to them, Citigroup as well, making that case. Bank of America actually had guided down. So the question is, were people paying attention to some of this? Because it does look like the interest margin coming in a little bit.
The interest margin is how much you make if you make a loan. They also,
Correct.
It looks like they're making more loans,
yes.
that they're maybe making it up on volume, as it were.
Well, industry, again, I think it probably has to do with the expectation. So we look at the H8 data. We have seen the industry loan growth is slowing. New to the guidance this quarter, it looks like they're talking about 8% loan growth for the year. I think we're going to want to hear more on the call about what they're seeing for clients in terms of demand. One of the things that Jamie Dimon has been very vocal about is tax reform and how he feels like that can help corporations. So we're going to want to hear more about that and how that factors into those expectations.
Charles Peabody around the table with us as well. Charles, your initial thoughts?
Well, the $1.82 clearly is a beat, but I think there's about $400 million of litigation reserve recovery. So that's 11, 12 cents a share, brings it down to $1.70. I was at $1.69. I was above the street, so it's kind of in line. Obviously, I'd like to see what the tax rate was and some of the other issues.
Guidance through the rest of the year pretty decent as well for loan growth, for the net interest margin too. What are your thoughts on that? Because compared to many of the analysts that we've had around this table, I don't want to call you a bear, but you've certainly been more bearish than the other guys around the table.
I think that's totally fair.
I've been skeptical about the earnings power and the sustainability of the earnings power. Yeah. And actually, I don't know if you can put up the EEG function for JPM, but if you look at that EEG function for JPM, you'll see that prices are going up, but earnings estimates are coming down. And so the marketplace is looking through the second quarter earnings towards Mnuchin's promised tax reform in September, towards the effects of the big buybacks in 18 earnings, towards infrastructure spending. So the second quarter earnings are being looked through.